Hi, I'm Lauretta Enders, VP and Broker of Emerald Management Realty Ltd. I'm joining Courtney Johnson at the Nuera Insurance office. Nuera is a valued partner of Emerald, and Courtney is Nuera's Business Development Manager. Thank you for joining us, Courtney. I'm excited to talk to you today about condominium unit owner insurance.
Thank you, Lauretta. It's always a pleasure. I love talking about insurance, so fire away.
Okay, so let's get started. So one of the most common questions we get is, what's the difference between a unit owner's policy and a corporation's policy?
So that's a great question. A corporation policy is insuring the entire building. However, the unit owner needs to insure from the walls in on the unit.
So my property management company's told me that I really should have deductible coverage. What is that for?
So the deductible coverage is your condo building has their own deductible, and it is super high. So in Alberta, there's legislation that the maximum that the condo corporation can bill each individual unit owner is $50,000. So because of that, most insurance providers now have the minimum for condo deductible protection in Alberta at $50,000. So that way, even if your condo's deductible is only $25,000, you're still covered. If they increase their deductible down the road up to $50,000, you'll still be covered. So that's why most insurance companies now have the minimum at $50,000 instead of $25,000.
What is contingency and loss assessment coverage?
So that's really complicated. They're very similar but do different things. Contingency coverage is in the event that the condo corporation doesn't have enough insurance for the building value. So say the condo corporation insures the building for $9 million, but in the event of a total loss, it costs $10 million to rebuild it. The contingency coverage means that each unit owner is going to have to chip in to make up that additional $1 million to rebuild the building. So loss assessment is in the event of a claim, everybody has to chip in a little bit to help cover the cost of that claim.
What exactly does a unit owner policy cover?
The unit owner's policy covers essentially everything within the walls of your unit. If you were to take your unit and flip it upside down and shake it, and everything that falls out, that's what your unit would cover. The condo's corporation's policy covers the frames, the walls, everything like that. So anything that were to fall out, like your appliances or your furniture or your window coverings, those would be covered under your policy, where your kitchen cabinets and your counters would be covered by the condo corporation.
If a condo owner is renting their property out, do they need a different type of insurance?
So there's a lot of different coverages that you can choose when you're renting out your condo, but it's also really important that your tenant have their own policy to protect your unit in the event that they are liable for damages to your unit. In the event of a claim that your tenant can no longer be in your unit and you lose that rental income, you would be able to file a claim with your insurance company to recuperate that lost rental income for up to 12 months.
What happens if a condominium unit owner is responsible for damage to another unit or to the condominium corporation?
Even if your tenant has renter's insurance, as a unit owner, you still need to have insurance yourself, because a renter's insurance policy doesn't cover the physical unit. It only covers their contents and their liability. So in the event that there's another claim that your tenant is not liable for, you still need physical coverage on your unit.
Thank you again, Courtney. I appreciate your insights and your passion for a topic that not everyone shares.
It was a pleasure, Lauretta. And yes, I am an insurance nerd and I just can't hide it.
Thank you again for joining us, Courtney. I'm excited to talk to you about your passion for insurance.